Hello, fellow rebel capitalists. I hope you are well. I wanted to go over what I think is probably the biggest story that everyone is missing in this whole Evergrande debacle in China. And they did make their debt payment on Tuesday, but they have another one, I believe, today or tomorrow. So we'll have to see if they make that one. But there's some news that's coming out of the Chinese government where the authorities there are telling the local banks to prepare for Evergrande failing. And this would imply that they don't intend to bail them out. Here's a story from CNBC. China asks, oh, no screen share. Oh, sorry about that, guys. Okay, let's get the screen share going. Okay, there we go. Back to the article. China asks local officials to prepare for possible storm if Evergrande fails, according to the Wall Street Journal. So the key points, and let me zoom in so it's easier for you guys to see. Local officials described the signals from Chinese authorities as getting ready for the possible storm and said the government told them they should only step in at last minute to prevent spillover effects from Evergrande's demise, the Wall Street Journal report said. And so I've got a lot of thoughts on this. Number one, like I said earlier, this tells you that the government is hinting that if Evergrande fails, they're not going to bail them out. But also, the Chinese authorities are telling local officials that they need to step in at last minute to prevent spillover. I don't know how on earth they would prevent spillover unless they're talking about some sort of social unrest or civil unrest due to all these people being high and dry that gave deposits to Evergrande for apartments that they were going to build, but now they have absolutely nothing. So they basically lost their entire life savings. But as far as from financial spillover, the systemic risks that Evergrande had relative to the rest of the market, the rest of the economy, I don't know how on earth a local official would do anything about that. And we're going to talk more about that in just a moment when we look at the Chinese repo market. The report also indicates that government officials may still have a limited appetite for bailing out the company despite the global implications. So what we were talking about earlier. The company resolved payment on a local bond on Wednesday. Okay, I thought that was Tuesday, helping to boost Asian markets. However, it is unclear if the company will pay interest due Thursday on its offshore bonds. Bloomberg reported Thursday that authorities in Beijing told the company not to default on those dollar-denominated interest payments, as if they have a choice. That's funny. That assumes that they have the dollars to pay the debt. But this goes back to what I was saying in a video the other day, and I really highlight this on today's whiteboard video on the George Gammon channel, that we've got to pay attention to global dollar-denominated debt outside of the United States. I used a chart in my whiteboard video today that showed over $12 trillion of outstanding dollar-denominated debt, and that's the debt we know of. I think there's a lot of dollar-denominated debt in the shadows when you consider the euro-dollar system and the loans that banks have between each other, kind of that the ghost ledger, as I call it in some of my videos. So what happens if those dollar-denominated loans, if people start defaulting on those? Well, that reduces the balance sheet capacity for those banks in the euro-dollar system to extend more debt. Said another way, that reduces their ability to provide liquidity to all of these global corporations. Well, if the corporations don't get the liquidity they need, then what happens? Well, what happened to Lehman Brothers when it didn't get the liquidity it needed from the repo market? It went bust. It's the exact same thing here. We have all of these financial institutions, and corporations, mega corporations, and sometimes even countries that have assets that are illiquid. That's on their balance sheet, but they need overnight liquidity in order to pay their bills, to make payroll so they don't go under. And the banks provide that dollar liquidity for them, or the repo market also provides liquidity, whether it's in dollars or in yuan. And so if that banking system is not providing the liquidity, then the whole house of cards comes crashing down. And my guess is that's one of the reasons why Beijing said, okay, we may let you fail, we may not let you fail, Evergrande, but whatever you do, make sure you pay your payments or your dollar denominated payments first and foremost. All right, so now let's kind of go over some charts to understand the gravity of what I'm talking about and understand the Chinese repo market a little bit better. First off, we have issuance volume. This is fascinating, and this is another chart or diagram, data point I used on today's whiteboard video that will go live on the George Gammon channel this evening. But this is the issuance volume of residential mortgage-backed securities in China. And I think I might have used that pie chart the other day. I'm looking over here at Josh. I think we used the pie chart the other day where I was trying to decipher which category included the mortgage-backed securities. But that pie chart actually went back to 2014, 2015. And this is really fascinating when you look at this data, and it shows that there were very little mortgage-backed securities in the system in 2014 and 15. But look at how they have grown exponentially since then. And by the way, this just goes to 2019. I would be willing to bet dollars to donuts, if that's the saying, that the mortgage-backed securities in the system is far higher today than it was in 2019. And the reason that's important, of course, going back to the repo market and banks providing liquidity, is the only way they'll provide liquidity is if you got collateral, and you have to have pristine collateral. Well, what happens if your collateral is pristine today and not pristine tomorrow? You can't get the liquidity you need, and there's a possibility you go bust, especially if you're an entity like Evergrande that is levered to the hilt. So moving on, let's talk about how their trade partners affect the global economy when we think about, or when we see this through the lens of there being $12 trillion of debt outside of the United States that we know of. So I pulled up this statistic, the World Integrated Trades, this is from the World Bank, excuse me. And I doubt you can see these numbers, I apologize, but this is basically China's trade partners, and specifically I highlighted the countries that are importing the most to China. So why is this important? Because if China is importing goods and services, since 50% plus of global trade is done in dollars, they would be exporting probably just as many dollars as they're exporting yuan or other currencies. So you look at just with Korea, they import $177 billion of stuff per year. Japan, $165 billion. Other areas of Asia, $155 billion. United States, $154 billion. Now you say, oh, that's great. The United States is actually exporting things to China. And your enthusiasm would be short-lived, because if we just look at the other column, which is the exports, you see that China is exporting $430 billion, and we are exporting $154. So on net balance, that's still a huge trade deficit for the United States, which means more dollars going out into the system, going into China, and then they're taking those dollars to buy goods from other countries. But if you combine the aggregate total of how much China imports annually, it's a little over $2 trillion worth. And again, to be very clear, they're paying with a lot of those imports with dollars. Okay, so let's think this through. If Evergrande goes bust, that's going to affect the mortgage market in China. It'll affect the little players. There's a lot of systemic risk. There's a trickle-down effect there for sure, a domino effect, where if that one entity goes bust, it takes a lot of other entities down with it. And then the counterparties involved in the repo market, the Chinese repo market, that provide the overnight liquidity, they're going to look at the banks that have those mortgage-backed securities on their balance sheet and are offering those up for the overnight cash they need. And they're going to say, no, we do not want that collateral. It is no longer pristine. Therefore, if that puts strain on the banking system, and a lot of people, I think on Twitter mentioned that, oh, George, that's fake news because the Chinese banking system can't have problems because they're all owned by the government. That is nonsense. There are a lot of banks in China that are not controlled or owned by the government, HSBC being the first one that comes to mind. But if you actually look up all of the banks in China, they have a lot of small community regional banks that could go bust and supply fewer mortgages. That brings down housing prices, okay? And when you have housing prices at 46 times the average annual income, that's a big, big problem if housing prices go down. That means that people won't be able to pay their loans because the only way they could pay their loans before was through capital appreciation. Okay, so what I'm saying there is that leads to recession in China, most likely. And if there's a recession in China, that means that they're buying less stuff. Okay, well, one man's spending is another man's income. Therefore, there's fewer dollars going outside of China. And that means less dollar cash flow. And that means an incredible strain on the euro dollar system, which is providing liquidity for all those corporations outside of China. And that's the systemic risk that the mainstream media just is completely ignoring. Whether it's because they just don't get it or it's too nuanced for a 30-second soundbite, who knows? But the bottom line is they're not looking at any of this, and they're definitely not looking at the Chinese repo market, because when you hear them bring up Evergrande, it's all about just Evergrande or their suppliers or the real estate market, just like they got hyper-focused on the real estate market during the GFC in the United States, and they just got these blinders on. So they look at mortgages and assume that that's the cause of the problem. And they totally ignore repo, they totally ignore collateral, liquidity, and the euro dollar system. I want to point out, just to back up my point there, that the average delinquency rate in the United States during the GFC at its peak went to 9%. 9, not 90, 9. And that was up from an average of about 4.5%. So the fact that the mortgage-backed securities went down in price, obviously that was reality of the situation. But most of those mortgages were paid. That's what I'm trying to get at. So that in and of itself shows you that the mortgages not being paid was just a small piece of the puzzle. That by no means was the catalyst that brought the whole house of cards down. And so that's what people are unfortunately fixating on right now in China, and they should be really focused on the bigger picture. And that's what I wanted to present to you in this video, so you can start thinking that through.